Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 3rd, 2017. So we have quite a bit to cover. So first of all, stocks of course broke out to fresh highs. We'll look at some of the transportation stocks, some of the consumer staples, also at Apple. We'll look at junk bonds that maybe they're topping out. I don't know, it's possible. Investment grade bonds, on the other hand, are not moving lower because the rate hike, didn't occur. So that's a, well, in my opinion, good thing. We'll look at the dollar and how it's affecting gold and gold miners. And West Texas oil broke to 52-week highs as it catches up with Brent from European benchmark. And we'll look at natural gas, which could be ripe for an options breakout play. Okay, let's look at S&P 500. This is SPY, ETF SPY. Clearly a bullish chart. This is a fresh all-time highs, record all-time highs. A few weeks ago I pointed out this candlestick and I thought, this looks like a buying climax. Obviously it was not a buying climax. It just was a, big hollow candlestick at that time all-time highs, and we can see that we just continued higher. So one candlestick in isolation doesn't really mean much. So overall the picture is pretty unequivocally bullish for multiple reasons. Number one, of course, is the fact that these are all-time highs, 52-week highs and all-time highs. Advanced decline lines are also at fresh all-time highs, very close. There's a small divergence, but I'm not sure it is big enough to warrant, something to worry about. As far as the, indicators, as of late, I've been trying to just, I actually completely moved away from momentum indicators. I no longer use any momentum indicators because they all show the same picture, and also they're not terribly useful because, for example, here back in February of this year, you can see the index was overbought. Again here in October and November, index is quote-unquote overbought, and doesn't, if you think that this is overbought, shouldn't the index, shouldn't the security drop afterwards? But notice that it was overbought here in the beginning of October, became more overbought, pulled back a little bit, now it's again overbought, but basically we're moving higher and higher despite the overbought conditions. So momentum indicators I pretty much ignore. As far as market breadth indicators, I do use them, but I use them in conjunction with a price action analysis. And right now I don't see big issues with percentage of stocks above 200 and the bullish percent index. They're both in the 70s, so I think it's a pretty unequivocally bullish chart. Long term, this is a weekly time frame for S&P. Notice this just incredible breakout to fresh highs following this triangle consolidation and a bullish breakout. Again, I keep saying the same thing over and over. If you're a new trader, or even if you're an intermediate trader and you think that you could, find a good place to short this chart, I would advise against it because this is, when we are hitting fresh highs, we should be looking for bullish opportunities to go long. For me, it does not make sense to look for short opportunities. Even if you are successful and somehow catch the very top here, the move down is smaller than the move up. So I think, in this case, I would just avoid looking for shorting opportunities. Here's QQQ on a daily time frame. This is Nasdaq, also fresh all-time highs. Last week we had this big gap here, and they run higher as Amazon reported blockbuster results really, and actually today we see Apple also broke out to fresh all-time highs. So here's Apple in the weekly time frame, but we can do the same thing on daily, it doesn't matter. Here's daily Apple, and these are fresh all-time highs as well. So a pullback of this sort that occurred in September was basically an opportunity to buy. It was not an opportunity to short. IWM, this is Russell 2000 index, so we are long IWM at MasterCharts Trading, and we entered back in August when there was a well, it's pretty significant selling, because notice that we actually closed, IWM actually closed below the 200-day moving average, and then went on this just tremendous rally towards fresh all-time highs. Now we're just kind of consolidating sideways. I'm sure there's going to be more back and forth, but once again, these are all-time highs. So to me, this is an unequivocally bullish chart that I would not short anytime soon. Financials moving higher despite the fact that bonds continue to move higher. So interest rates were actually moving lower, and there's a lot of banks in this sector ETF, and banks usually do better when the interest rates are higher, so that they have higher profit margins. But in this case, it looks like financials are shrugging off the fact that bonds are also moving higher, and have put in a fresh all-time high here as well. Here's industrials, XLI, also all-time highs. Now a small pullback. Now perhaps we're done correcting. Maybe we'll do a little bit more sideways action. Excuse me. I think industrials are pulling back partially because of a relative weakness in transportation sector. But notice these are also all-time highs for transportation, IYT. So a pullback, a relatively shallow pullback of this nature, I think also is going to basically be an opportunity to go long. Once again, I would not short this chart anytime soon. Okay, here's XLP, consumer staples. This one I'm a little worried about because, well, for several reasons. Here's a 50-day going below the 200-day moving average. I don't really use averages, moving averages that much as of late. But if we look on XLP using my elite indicators, notice that XLP closed below this light blue line, so this is definitely a worrisome sign. So if we see more, further pressure to the downside, I may not want to be trading this one, but it's not like that bad. I think the reason why XLP is under pressure, I think, is because of several stocks. For example, here's Philip Morris. You can see it's relatively strong downward pressure, but we can take a look at the same chart using the elite indicators. I think that if we close below like 100 here, I think I would be quite reluctant to be buying this chart. And here's one that's pretty unequivocally bearish, and that's CVS. So let's look at CVS on this chart as well. And yes, those are 52-week lows. So yeah, this is one of those charts that I would be okay shorting. And the way I use these indicators, you can actually get these indicators if you sign up at MasterCharts Trading. But if we have a bearish security, then we can short at the light blue or the yellow line as it continues to move lower. Here's one that's very interesting, and this is energy. And when we get to oil, I'll also talk about energy a little more. But It's looking more and more like energy has indeed bottomed. Notice that we have a 50-day moving average. Well, it's going to go above the 200-day moving average, and it just feels like XLE is attempting to bottom. So let's look at XLE from the point of view of these elite indicators. They're very useful in my opinion. They provide good resistance and support lines. So notice that right now we're basically above this light blue line, but what I'm really looking for is a close above 72.20, and then maybe we'll see if we could continue higher from there, because this is a very important level in my opinion to watch, and if we break above it, I think energy would become bullish. Right now it's still kind of in between. We don't know exactly where it's gonna go, but I'm leaning more and more bullish for energy. And here's utilities, another important piece of the puzzle. So utilities are a little bit more dependent on bonds, but looks like, you know, bonds are moving higher, utilities are moving higher in tandem. So utilities are, you know, more dependent on interest rates, and they like lower interest rates, so it makes perfect sense. I am personally long utilities, and this almost is a fresh high. Actually, it is a fresh high right there. And finally, here's one that is I am not interested in. This is IYZ, and this is a pretty clearly bearish security. We have a 52-week close. So let me show it to you on the using the elite indicators. And here is the same chart, IYZ rather. So first, notice that we have a breakdown here in September of this year, a bounce, and this is the bounce to be short, where you short. You can short either at the light blue line or at the yellow line. But notice that even if you shorted the yellow line, this would have been already a profitable trade for you. So these indicators, I think, are pretty robust. So you can check them out, get them for free if you sign up even for a trial membership. So overall, again, stock market I think is pretty unequivocally bullish, and I would not short it anytime soon. I would only look for buying opportunities currently. Okay, let's move on to the bonds universe. Here's junk bonds on the weekly time frame. Look at this move from February of 2016 until now, and it seems to be continuing really. Yeah, I still don't see too much top in action. I mean, this combination of candles is not that bearish, so maybe we'll get a little bit pullback, but I don't see a reversal yet. I think this is still a bullish chart. So in other words, the junk bonds correlate highly to the general market, and S&P seems to be, you know, moving in lockstep together with junk bonds. I think once the junk bonds turn around and start heading lower, maybe then the stock market will also experience some pressure, but I just don't see it right now. TLT here, last week I was sort of worried because notice that we kind of moved strongly lower, and I was really afraid we'll close below the October 1st low here. We did not, which is a good sign, and then notice that this week we moved higher with a, you know, very strong bullish candle. So maybe this combination is indeed a bottom here, and maybe we'll continue higher from here. I think TLT is bullish, and I personally have a position in TLT on the long side. Right, let's move on to the Forex universe. Here's US dollar on a daily time frame. So could this be bottom in action? It's possible. Resistance is pretty clear up here from this support break in July. So we're coming up exactly there. Will we stop at that resistance and move lower? Remains to be seen. So how did I get this resistance? So first of all, resistance here is from the lows here. That's around 95.50, 96 bucks. Here is the same chart using my indicators, and the resistance here I see is around 95.80 or $96. So it's pretty much lines up with one and the other. Long term, I want to say that this is a bearish chart now, and this is a normal rebound. So again, 96 is a big resistance area to watch. If we hold here and then continue lower, then we're unequivocally bearish. Right now, it's still possible that we will actually break out and continue higher. It's not, look at this move. This is a multi-year highs, and all of a sudden we're in multi-year, 2-year lows. It's pretty wild moves here. US dollar versus Japanese yen. This is a weekly time frame. Not much has changed. I think this is a bullish chart. In other words, US dollar is winning this battle against Japanese yen. So it could move still higher. Of course, if US dollar moves higher versus Japanese yen, then the index itself will also move higher. British pound versus the US dollar. This 52-week high is now pretty much a normal pullback, bottom in action. Let's look at it through the elite indicators. So let me see. Oh yeah, sorry, GBP USD. I'm looking in the wrong place. So GBP USD, and notice where it's bottoming. It's bottoming exactly at this blue line. So this is a support line right there. Again, you can get these indicators at MasterCharts Trading. Just ask me for them. And finally, Euro versus USD, US dollar. This is a weekly time frame. Very big run here. 52-week, actually multi-year highs. Now a throwback. Normal behavior, I think. It should find support somewhere very soon. Here's Euro versus US dollar, and I was demonstrating this trade to my subscribers. I don't trade currencies, but you could trade currencies with the elite indicators. So I would be buying here at the green line, maybe even at the blue line, but I would put my stop way back down here at the light blue line. So there's still plenty of fluctuations that can go through and then still continue higher. So overall, I think the dollar is bearish, but I think the resistance up here around 95, 9.5, 96 will be tested relatively soon. And now that we looked at the dollar, let's look at gold. Here's gold on a daily time frame. So 52-week highs, I think, still is a dominant feature of this chart. Now a more or less normal pullback, but gold has these tendencies of just overshooting the support resistance line. So right now we're in the middle of a throwback, basically. We could look at the elite indicators and see where this is going as far as our support resistance is concerned. So here is gold futures, and basically, yeah, currently we are around the blue line. So this is, buying opportunity in my opinion. If we move lower and we take out the lows from July, and especially a low from here the March, then I think we could be gold could be in a world of trouble. So right now I think we're still more or less bullish, not very strongly, I guess. Here's gold in a weekly time frame. Still think that we have a breakout above resistance around 1300. Now something or other very messy, I guess. and we could still go through some bottoming action, and I think eventually we'll go higher, but this will depend on the dollar, like I just described. GDX on a daily time frame, choppy chart obviously, but GDX is very choppy. It's not as obvious on this chart where this is going, obviously, but the gold will follow gold miners. Here, what I would be very concerned if we break below the like 21 bucks and close below it. GDX on the weekly time frame, we had the bullish engulfing right there a couple of weeks ago. That was actually confirmed the next week, and notice what happened afterwards. It was negated. So one of the reasons why I don't really use candlestick patterns that much. I use them to a degree, but see how it failed right there. So overall, it's kind of yeah, it's kind of like not a very decisive chart. Ideally, we should see a breakout above 26 here, above higher. But if we move lower, then most likely we will be in a bearish territory. In fact, here is GDX on a daily time frame, and here are some of my proprietary indicators which have weakened. So notice that we have this indicator has weakened, this indicator has weakened. We are oversold currently, so we're ripe for a bounce. But the problem is if we weaken, any more, then we could tilt into a bear market, and in that case we will need to look for, we have to reverse our thinking and look for shorting opportunities. But for now, I think it's still gold and gold miners are in a bull market. Okay, let's move on to the commodities. Here's West Texas Intermediate light crude oil on a daily time frame. Up to about, I would say up to about mid-October, I thought that we could still roll over into a bear market and continue lower. In fact, I shorted oil myself back in September on this candlestick right there. And I got a little bit of a profit, but then here's where the turnaround, I think, occurred. So on 6th of October, I was very happy, and I was like, oh, look, I'm winning, and maybe I'll continue. Maybe oil will get to like 45 or maybe 42. But then see what happened on the 10th of October. So it gapped up from this point on to this point. It gapped 3.5, almost 4% right there. And then look at this. It just continued higher. So now we're at 52-week highs, and let me show you Brent oil also. Here's a weekly on Brent. Notice that Brent broke out to 52-week highs before West Texas Intermediate did. So it appears that currently West Texas and oil in general seems to be in an uptrend. I'm personally not trading it one way or the other because I'm not sure if it's I'm not sure about the reason for this 52-week highs, and maybe once the producers realize that there's the price is very nice, then they'll bring in more rigs online, and eventually the price will roll over. So I'm basically staying out of oil market for now. I wanted to point out XLE, and I already pointed it out at the beginning of this presentation. So here's energy on the daily time, on the weekly time frame, and West Texas in the bottom part here. So these red lines here, I'll show in the beginning of a like sideways consolidation and a drop afterwards. So notice that we had a drop here, and these are 52-week lows for energy, but notice that it hit 52-week lows and then turned around and continued higher. Now here are the 52-week highs for oil. So actually this does make sense for energy ETF to obviously track oil. So if oil is breaking to fresh highs, energy, XLE could be a very interesting play, provided, as I said, XLE breaks out. Well, my level of interest is 70 to 20 currently. So if it breaks out above that level, I'm almost sure that this is going to be in a bull market. But until then, I want to just kind of stay out and watch it. Here's natural gas on a daily time frame, and honestly, I'm not sure how to trade this. Look at this choppy mess, just incredibly choppy. So on a daily time frame, I don't think it's a good idea to trade this thing. So let's look on weekly time frame, and on this time frame, it's a little less choppy. But what I see here is I see this consolidation. As high as this is natural gas on the spot price. So as far as high as $3.20 right there, and as low as say $2.75 right there. So I think this could be an options play. I think it's called a straddle. I don't do options, but I think this is called a straddle if I'm not mistaken. Correct me if I'm wrong, by the way. I'm cool with that. In the comments, you can correct me if I'm wrong. So we could see a breakout or a breakdown, and this could be, you could use it, you could play this with options potentially. Honestly, I don't know which way this is gonna go, so I'm staying out of it as well. And I am warning my subscribers against trading commodities, especially if you're a new trader. Just to completely stay out of commodities, because they're, I think, in my opinion, more difficult to trade than stocks. All right, if you have any questions, please send them in. Hit the like button, of course. If you have any comments, share them below, share this video, and do sign up at MasterChartsTrading.com, at least for a free account, so you can get these indicators, and you get a daily newsletter, as well as alerts about various stocks that I'm buying and selling. All right, thanks for watching, and have another great trading week. Bye bye.